Hey, everybody. Welcome to the NVIDIA earnings watch party. I am joined by Daryl, and we are going to host a live review of the earnings of NVIDIA and seeing what this amazing company is going to announce. I will look at the fundamentals. I'm going to update my valuation that's based on discounted free cash flows and looking at earnings per share. And Daryl will do an amazing job looking at the technicals. How you doing, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
And Nvidia is pretty flat today, just down a tiny bit, but it's had a nice 5-day run leading into the earnings. Investors wanted to get their piece of Nvidia before the earnings are dropped. And I think you have the exact schedule, right? What time are they going to drop their earnings?
20 minutes after the hour.
All right. So it'll enable us to get warmed up. We have, man, look at that odometer go 100, 200 people on the live stream. Everybody, thanks so much for joining. We're going to make this a really cool watch party. We're going to analyze NVIDIA from every angle we can think of and really make this an awesome stream. So just to kind of get our juices flowing, NVIDIA is a $4.4 trillion market cap company. Amazing. Absolutely amazing. And they have $148.5 billion in revenue, which is incredible because not too long ago, these guys were just a fraction of that. If we go back to 2021, they were 16 billion. Now they're like almost 10 times that amount. That's unnatural. But that's NVIDIA. P ratio 58.6, forward P 36.8. Analysts think it's a little discounted. Man, you got, oh, well, you ran out of time. Market is closed. Can't buy any shares in just intraday anymore. But now we're going to be waiting for the earnings to drop, and NVIDIA could tell us what they've done and what's going to happen one quarter ahead. And maybe the CEO will also provide guidance on what's going to happen in the future. Saeed, thank you so much for joining. I really appreciate you joining. Carlos, a regular. How you doing, man? Thanks for all the comments. Mohammed, great to see you again, sir. All right, so this is what the fundamentals are kind of showing. Would you mind showing us some charts there, Daryl, and then we'll kind of get our minds around NVIDIA, getting ready for the earnings to drop.
Okay, so let's look at the 1-year daily. I noticed about 30 minutes ago when I was looking at the chart that we had printed a doji candle here, and now it looks more like a hammer, which would indicate to me that we're going to see a little bit of downside. So we'll see what happens in 20 minutes. But that's what this candle here is looking like to me.
My desk shook when you said we might see a little downside, by the way.
I know I'm
like, no.
I know Tom Lee yesterday on Closing Bell, he said he expected the other, so I'm in a little disagreement with Tom Lee. We'll see how that works out a little later. It wouldn't surprise me to pop up, initially, but I really do expect a little bit of a pullback. And I opened an option earlier this morning, supporting that theme. So I'm putting my money where my mouth is here.
All right. My best guess is that there's the good news tank, the capacity, or I should say, all the available good news on NVIDIA is priced in. There's no new surprise unless they're like, hey, we're going to start putting GPUs on toothbrushes. And then that toothbrush is going to brush your teeth, floss your teeth automatically. You don't have to do a thing. It's just there's very little, room left for positive stories. I would say that. and there is a little bit of room for maybe a little bit of bad news to be communicated. If there's any kind of bad news, I think that could really cause a sell off. But this stock here has really taken on the it's the face of the data center build out for AI. It's absolutely the face. And there's a lot of companies that have benefited behind Nvidia, Broadcom being one. The utility companies are flourishing. And I think the hyperscalers are going to benefit more longer term. AWS from Amazon, Azure from Microsoft, Google Cloud from, of course, Google Alphabet. So it's an amazing company, and I'm looking forward to seeing what they're going to release in roughly about 16 minutes. It'll be interesting. Last release they announced on May 28th, and they had revenue of 144.1 billion, up 12% sequentially, but up 69% from the previous year. And these are big numbers. This is not little stuff. This is not little small cap stock that's, growing from 400 to 600 million. No, these are billions. These are big, big numbers. Data center revenue grew 73%. So I think those numbers, when they come out, if they grow like 60% plus overall top line revenue, I think the stock's going to be fine. If the data center shows 65% growth, they're going to be fine. It's just going to be in line with what they're doing. I don't know if they're going to offer any like longer term guidance, like, hey, we think in a year or 2 years, this, that, or the other, because the future is really hard to tell in this space. For all we know, I think Saeed's putting, the topic of Chinese exports, right? Yeah, we've had a data center build in the US, but is that build going to now start and continue in China or in Europe or in other countries, right? So that might be like the next leg of their growth. We'll see. We'll see what they have to say. The CEO is not shy. He's willing to tell us a lot about their strategy. He's a little bit of an evangelist. He's really evangelizing how AI is really going to, he calls it the next industrial revolution. I'm not ready to sign up for that, but I'm just repeating what he said.
Let's get some input from the audience. Why don't you guys type in a 1 if you think they're going up afterwards, or a 0 if you think they're pulling back? Let us know what you think.
So a 1, repeat that instruction again.
Type a 1 if you think they're going up after this earnings report, or a 0 if you think they're going down. Okay, Mike, the dividend investor guy. So it'll be interesting to keep an eye on the margins this time, and also what their sales in China and how they were affected the last time or this past quarter.
Yeah. We'll see. So I'm seeing some zeros there. So 0, and then I'm seeing a 1. Got one person on the fence, so I guess that's a 0.5. No, he was on the fence, but then he went 1. So he's saying up. And then we got a 0 from Ben, little J. All right. Cool. Good to see you, little J. All right. Yeah. So we'll see. My best guess is the stock's gonna trade down. So and Yoon Trader, they're gonna drop at 20 after. So it looks like we've got 12 minutes to go. And then we'll have the earnings. We could read them and review them and see what's going on. But I'm thinking they're going to trade down. I'm going to stick to that expectation. I don't know that they're going to go down a whole lot. They may go down just a tiny bit, maybe 1 or 2%.
Yeah, the implied move is plus or minus 6%.
Mm-hmm. All right. And let me look at the forecast. This is interesting to see how, I mean, NVIDIA is covered by many analysts. 67 analysts are putting their forecast out there. And then out there at 2029, 2030, fewer analysts are putting their thoughts out there, but these are interesting to check out. So they're in their fiscal year 2026. They have a fiscal year that ends roughly 1 year after the calendar year ends. And it looks like they're expecting this year to grow by 58%. At least analysts are expecting that. So that would be a little bit slower because the numbers are getting bigger, right? You can't keep growing this big and expect the percentage to go to continue to expand. No, it just makes logical sense that yeah, you're getting bigger. You're putting a lot of new revenue on the top line. So that looks pretty favorable there. If they come in line with that, I think they're going to be fine. And the earnings per share keeps going up real fast, going up 52% in the current year. And next year, it's supposed to expand by 37%, 15, 10, and then 12. So these are fantastic numbers. The forecast of when the revenue is going to slow down, that's like the big question, but I don't think we need to worry about that for a year because we're way over here. And the best forecast is probably 18 months out, the rest of this year, and then maybe 12 months after that. So it looks like it's still going to be very prosperous for the company. Looks like some news is coming out on Snowflake that they beat, and we had a software company yesterday beat big, which was MongoDB, and now Snow beat earnings per share by 30%. What is Snow going up? Snow is in the data platform business. They are not necessarily a database company. They're up 12.46%, and they were up 3% earlier. I think they caught a little bit of that MongoDB rally, and they're continuing the party. 12.6, excellent, nicely done. Snowflake. We'll take a look at that after Nvidia. I don't want to spend any time other than on Nvidia to get going, but it looks like Snowflake's got a lot of good stuff going on. I could talk about Snowflake. I know the company, I know this industry quite well, and I could, share some comments that I have and where I value the company. The stock for the 1 year, it's up 70%. It's doing great. Look at that. This stock came out with a lot of fanfare. They were supposed to really, really revolutionize things. I think some of that mission was accomplished, but they do have some pretty stiff competition. When we talk about data platforms, these guys are competing against some of the biggest organizations in the world. Microsoft would like to say that, hey, we can work with Snowflake, but you could also use our data platform for everything that Snowflake is providing. Google, to some extent, can say the same thing. And there's other companies out there that are competing against Snowflake. We'll see if Snowflake can fend those competitors off or if they're going to really continue to grow. I don't think the earnings have made it into stock analysis, but I look forward to seeing Snowflake in a little bit. Turn my attention back to Nvidia. Go ahead.
HP also reported they beat on both the top and the bottom.
Nice. Wow, man.
CrowdStrike
Technology.
beat on the top and bottom.
But they're down 7%. Did they cause another outage? Just kidding.
Good question.
Yeah, they're good for one good outage every year, right? Down 7.8%. Investors didn't like something. Those will be interesting to take a look at. Looks like Snowflake is flourishing. Hewlett Packard is up 5%. This one's a nice dividend payer, pays about 4% dividend. And Hewlett Packard's not had a good year. It's down 16.76%. The 1 year, down a lot. Geez. 5 year, it looked good for a while, but then it really faded. So investors are kind of regaining some of the losses. And I'm sure some investors are in it for that dividend income. But Snowflake is getting it done. Snowflake is really rocking. Really, really good appreciation. We'll take a look at this one. I have a full analysis on Snowflake that I'm going to update. And I've got an analysis on all the companies we're going to talk about. We're going to talk about Nvidia, CrowdStrike, Snowflake, and Hewlett Packard. With later on, we'll cover the others. Right now, I just want to keep my attention on Nvidia. Looks like we have 717 people on the stream. Thanks everybody for joining. We are just getting ready for this Nvidia earnings to drop. Bear with us. We're going to cover some other stocks later. And we'll be sure to cover the other news, but we just want to focus on Nvidia first. Okay, so where are you going to get your earnings announcement? I'm just at on their investor page. Do you go elsewhere?
I watch Yahoo Finance and Seeking Alpha. Yahoo usually posts it first, but they just post the earnings, nothing about revenue.
Yeah.
And then Seeking Alpha usually follows just a minute or two afterwards. We've talked about Bill. They beat on the top and bottom line as well.
Bill.com?
Yep.
You know, we talked about them on a live stream recently, and we were thinking that's a good looking stock because their growth. So it's a little stock too. It's a little cap. But it's down. So you said Bill Holdings, right?
Bill.com. BILL.
Yeah. Yeah, that's the one I'm on. Yeah, their stock's down in after hours. Well, maybe an opportunity. We'll take a look at it later. All right. So Nvidia stock is trading up in the after hours by about 0.5%. And Saeed's got a comment. Let's see here. Meta Alphabet have just passed Jan position. Interesting. Yeah, I noticed that Google was up today. Meta was selling off. Yeah. Meta's had a couple tough days. And there was a story, I think it came out late last week, that they were laying people off in their AI business. And that kind of caused a little bit of a sell-off, and it's kind of continued. Now, the stock's doing really well year to date. So I'm not overly concerned, but that just has been happening. Google and Amazon had slightly higher days. Nvidia was flat. Broadcom was up. And this will follow Nvidia's lead. If Nvidia has a good earnings, Broadcom will probably rally. While I'm here, looks like banking had a pretty good day. Berkshire had a good day. Microsoft's up. Palo Alto was up. And then CrowdStrike's down in after hours. Some software companies had a good day. I think they can thank MongoDB for that, as well as Okta. They had very good earnings yesterday. So that probably raised the enthusiasm for software companies because those companies did great.
Nvidia is pulling back a little bit now. Looks like HP maybe posted some good Q3 guidance.
Here we go. Kirk Hamster. What's up, Victor? Nvidia rising to $300 per share by the end of calendar year 2025. Man, that would be incredible. That would be, I guess, about a 35% rise from here. That would be incredible. And we'll see if it happens. I do think that September is going to have some pullbacks just because seasonally it tends to happen in September. We tend to have one each year. And we just have an expensive market. So just a little pullback wouldn't be a big deal. Maybe just let prices settle down a little bit and then we will start constructing a next upward move on the stock market, especially some of these stocks that are really growing their top line revenues and becoming more and more valuable. All right, we're nearing the point when this thing's going to be dropped. We got 1 minute before it drops. And then we can take a look at Nvidia earnings. We'll see how their revenue is growing. For me, the focus is that top line revenue. And then we can assess top line revenue growth and their guidance. To me, that's what's going to dictate where the stock's going. If the top line revenue is really strong and the CEO, is super enthusiastic, talks about how the story is just getting, more momentum for Nvidia, maybe a story around how China is going to be the next leg of growth, that can really put a lot more fuel in the Nvidia tank for the next move up. So that's where I'm focused. That's what I'm going to look at when these guys drop their earnings. And we are at the hour. Let's see who's going to release it first. What's going to happen? Let me know if you see anything, Daryl.
You bet I will.
And I haven't seen it drop yet. Wow, Nvidia's dropped to almost -3. It's dropping. Does somebody know something out there?
It's very good news for the option I bought today.
All right.
I still haven't seen it post yet.
Sometimes I think my computer's going nuts. Nope. That is not. Hasn't dropped yet on their website.
Carlos said double beat.
Carlos said what?
Double beat.
Double beat. Nice.
EPS by 4%. But the market is still down in after hours.
Double beat. Then why?
That's kind of what the market's been doing this quarter and this year.
I know that Google, when they announced their earnings, it was like a really good earnings and they sold off. And then I think Microsoft and Meta, they had really good earnings and the stocks flew up. So it's been a little bit of a mixed bag, like some earnings. And I wouldn't be surprised if the earnings are really good, that we're seeing an initial sell-off and then it rallies. That's what we've seen with Nvidia and other occasions. You have the stock sell off, then it comes back, and then it'll be +5, and then it'll go all over the place tonight. We will see. I'd like to get my hands on some details because that's where I think I'll be able to tell, hey, are these guys really just killing it, or is it?
I'm seeing some posts on X as well. Looks like the revenue may.
Okay, I've got it.
Oh, there it is. Yeah.
All right. Revenue of $46.7 billion, up 56%. last year or last quarter, they grew by a little over 70%. I was thinking if they can keep it above 60, then the market would just be like overwhelmed with positivity. The data center that grew by a lot more. It's 56. Okay. These are still incredible numbers. Okay. Blackwell revenue grew 17% sequentially. That's quarter over quarter. So that's phenomenal. Okay. There were no H20 sales to China-based customers in the second quarter. Nvidia benefited from 180 million release of previous reserved H20 inventory from approximately 650 million in unrestricted H20 sales to customer outside of China. Okay. And all right. For gross margins, 72.4% and 72.7%. So their margins are still really, really good. They've expanded. So year over year growth, 56%. They're going from last year, same quarter, they were at 30 billion. And now they are at 46.7 billion. Awesome. Okay. Net income expanded a little faster than revenue. That looks good. Okay, outlook. NVIDIA's outlook for the third quarter for fiscal 2026, revenue is expected to be 54 billion. Okay. Let me bring this up again. So they're going to go from 46.7 to 54. That's a very good growth. It's like 7.3 billion. Sequentially, that would be a very, very good move. See, because sequentially here, they went from 44 to 46. So that would be a very good leap forward in revenue. And not sure what that would be year over year. The company has not assumed any H20 shipments to China in the outlook. So that could be a positive. Margins are going to be higher than the current quarter because the current quarter we're at 72 point something. Okay. All right. So this is pretty good guidance. I mean, you think about the sequential growth looks really good. It's going to be higher sequential growth in the quarter they're going towards than what they experienced between the first quarter and the second quarter. They also are not including any of the China sales. Okay. If China starts buying chips, it's going to help them. So I think this outlook is good. And they may be leaving kind of China expectations completely off to the side so that their outlook is a little conservative and they can make sure they beat it. So they show up 3 months from now and they're like, hey, voila, we sold $10 billion of chips to China. And now we're doing even better than we thought we were going to be doing. They certainly want to leave some room to be able to beat and raise in a quarter. So looks good. The data centers where they're making all their money. $41 billion of sales in that data center. It's up 56% from a year ago. Incredible. They are kings of the data center. Gaming, where they started, this is their legacy business. It's up 14%, but it's tiny. It's tiny compared to that data center. The data center is way up. It's 10 times bigger than their gaming business. And then these businesses don't really matter. Automotive and robotics, half a billion. And FYI, the CEO does talk about robotics quite a bit, but the revenue is really small, tiny. It's like immaterial.
Yeah, it is immaterial, but they did report that they're releasing Blackwell into their robotics framework.
Yeah. Okay, so I'm impressed with the earnings. As mentioned, there's just so much good news for Nvidia that what's the stock doing as we speak?
It's recovering. It was down to 172 and it's back up to 177. 7.
Yeah, exactly. So that's a little bit of what, you should expect in after hours because yeah, maybe there was an initial people read into, hey, no China sales, what's going on? Is there reluctance there? Is there some kind of regulatory issue with the Chinese government? And they processed it, and maybe thought about the earnings and are now buyers, or there is a higher number of buyers in after hours. So what I'm going to do is I'm going to take the earnings. They look fantastic. Let's look at the cash flow because this thing's like such an impressive document. So cash flow is a document that's the financials that I really focus my attention on. These guys are just killing it. Absolutely making money hand over fist. For the first 6 months of the year, $42.7 billion of cash from operations. We're going to deduct the CapEx line. And where is that here? So this is the line right here. They put $3 billion into the business. So we are well above $39.6 billion of free cash flow. 39.6. And when we double that, and it really would, that would just be simple to do, but it would actually be higher. That means that for the year, they're going to be at 80 billion plus in free cash flow for the current year. That's incredible. That is phenomenal. So let me hand it off to you, sir. You can take us through some charts. I'm going to update my valuation. And when we come back to my screen, we'll go over my valuation of Nvidia based on free cash flows, earnings per share, and we'll go over this gigantic, incredible company.
Okay. So Nvidia broke out of a multi-top pattern from November of last year all the way almost to February of this year. Not quite in February, but it was close. And they broke out above that on June the 25th. And with the exception of a small pullback last week, they haven't really stopped at this point. My only reasoning for putting in a protective put this morning was I just felt that the upside was a little limited compared to the potential downside. And one of the reasons for that is we bottomed out at 86 in February or in April after the tariff announcements. And since that point, we've climbed, 108%. So I thought the market had already priced in quite a bit of this. And my option basically had cost me about $760 with the potential, if they did drop, potential of a 3 times return over that. So a 3-to-1 risk ratio. So anyway, that's the reason that I went with, not because I'm negative on Nvidia necessarily. I own Nvidia. I've been a holder since 2023. So I like the company. I like the CEO. I like what they're doing. But I just had a feeling that we had kind of run the course here, at least for the short term. That's the only reason I had that protective put in place. So if we switch over to the after hours, we can see that there's been quite a bit of volatility. I don't know if this chart is easier on your eyes or the intraday chart. I don't know which one you guys like better. I can switch between them. You let me know in the comments which one's easier for you to see. So this is a 15-minute chart. I want to go out to maybe 5 minutes or so we can see more of the data. So right after the market closed, they were climbing. They got up to about 182, which is where they traded about 3 times throughout the day. They traded as low as 179 right after the opening bell within 30 minutes or so. And then once the earnings came out, looks like there was a pretty sizable drop to 172, but it does seem to be recovering a bit. We're currently at about 179. Let's go back to the 1 year and just take a look at where we are. So the RSI is currently at 60. That's in a really good position. We haven't got to an overbought condition, and we still have room to run there over the short to midterm. The PPO is positive. We don't yet have a crossover here. So we're running under the shorter term average is running under the longer term average. It would be nice to see that turn around for some upward price movement. We look at the relative strength and the momentum compared to the S&P 500. The relative strength is right comparable with the S&P 500 overall, and the momentum is trailing the S&P 500. The accumulation for the past year has been on quite a ride there. We're actually sitting at a 52-week high. This accumulation line is a cumulative total of the money flow. This money flow is this pattern here. So they've been positive in money flow since 25th of June. They've had a few weeks and months where they had negative money flow, but I would say most of the money flow has been positive. And they're outperforming the S&P 500 by 22% over the past year, outperforming the technology sector by 18.31%. Their industry group, which is semiconductor, they are outperforming by 5%, and that industry group has outperformed the S&P 500 by 17%.
Great. Very good. And looking last time they announced, right? It was 3 months ago, so that was late May. What do the charts look like when last time they dropped earnings? That's when the stock started to really rise, right?
It did, but not immediately. This was
Mhm.
kind of another reason that I was willing to take that option position that I did. So they traded up 3.25%. I can't remember what their let me see what their implied move was last quarter. Let me pull that up. I keep a record of that. So first quarter, Nvidia was an implied move of 7.8%. So they didn't move quite as much as the implied move. This time they had an implied move of 6%.
Mhm.
So they initially went up. This black candle was not a good signal. What that means is that buyers came in and ran up the price, and then it closed lower than it opened. That was not good. Then the next day it sold off some more. The next day it kind of just sat there, and then it really took off after that.
Yeah. Interesting. So let me come back to my screen and I'm going to show you a different simple chart and then I'm going to get into my evaluation. So the one thing that I would point out is last year at the same time, right? They announced and then the stock sold off by about 16%. Now that was combined with the market sold off in late August, early September. There was just a market sell off and there typically is one in September. So we'll see what happens this year, but this is what happened last year. And then it recovered back from there. And, buyers were rewarded, nicely 45%. Then of course we had a lot of volatility here at the beginning of 2025, the stock really did sell off, along with a lot of other stocks, right? During that big scare around tariffs, it sold off by 32%. But investors that really took the plunge there were really rewarded. It's up 92.5%. So nicely done, anybody who bought Nvidia at that time. Now, I've done the numbers, I've looked at the valuation, and Nvidia is priced 25% higher than the value that I calculate based on their free cash flows and their earnings per share. I'm going to start with earnings per share and kind of work my way towards free cash flows. I think earnings per share, the stock is priced with a 6% discount. Earnings per share will drive that because it's based on generally accepted accounting principles, and I believe I match what analysts are estimating. But really, the long-term value, the weight of free cash flows, is where some of these successful long-term investors, that's where they make their money. So if you value the company based on free cash flows, my valuation based on free cash flows, I've taken into account their tremendous 6-month run rate of cash flows, taking the first 6 months, doubling that, and then I'm growing it by 25%. We're up to an incredible, I'm expecting in the next 12 months, they're going to do about $99 billion of free cash flow. That's incredible because there's companies that are like not even close to $100 billion in overall revenue. These guys are going to, I expect they're going to crank out that in free cash and put it on their balance sheet and acquire other businesses, buy back shares. Maybe they can increase their dividend. We'll see. And from there, I'm expecting them to produce another $123 billion of free cash flow. Another 120. Those are like Apple-like numbers. Apple produces that kind of free cash flow. Those would be incredible numbers. If they do that over the next 4 years, I think they can. And then after that, sustaining that level of free cash flow and growing it by 4%. So these are staggering numbers. The net present value of all those cash flows is $2.57 trillion of value. Add cash on the balance sheet. They have this cash on the balance sheet right now. They have this amount of debt. So I get to 2.6 trillion of value. This is where there's a difference in valuation. This is a bigger difference. The free cash flows that I could forecast are 41% lower than their current stock price. So that's my valuation. Long term, we'll see how they can meet this particular forecast. If they beat this forecast, it won't be by much. But if things turn on the data center where you see a big pullback in capital spend, maybe these businesses are beginning to get, insecure about, whoa, we put a lot of money into AI. We're not getting a lot of value. We're not getting return on investment just yet. If they pull back those dollars, Nvidia is still going to be super valuable. It's just not going to hit these marks that make it incredibly valuable. We'll see. We will move along each quarter, each year, and see how much higher this stock could go, or if they're going to eventually hit a wall. And is that wall going to bring them down, or will they become like Apple? Apple, even though they stopped growing for like 2-3 years, their stock price still went up because they were able to really grow their bottom line and use those cash flows to buy back shares. So they created more scarcity in the Apple stock. Maybe Nvidia could take a page out of Apple's book and do some of that engineering on the finance side to make their stock go even higher. But it wouldn't be because they're growing the top line. A lot of things could happen, and they certainly have a lot of cash to work with. They have momentum and maybe going higher. We will see.
Carlos mentioned they did announce a $60 billion share buyback.
Yeah, and I would not agree with that. Of course, nobody cares, but you don't want to buy back shares when your stock is doing great. You want to buy it back when it's not doing great. So if you're going to buy back near a top, I actually think it's a sign of weakness. If the management team has to announce a buyback, why are they announcing a buyback? You just showed really good numbers. You don't have to buy back shares. You're buying them back at an all-time high. Why would you do that? You're kind of buying your stock at a very inflated price. Warren Buffett's been like he on May 2nd or 4th, whenever they announced, he talked about how, companies should buy back shares when their stock price is under pressure, not when it's at an all-time high. And that's where I think that doesn't make sense. It's actually a negative in my mind, but who cares? All right. What else do you want to talk about related to Nvidia?
Did they print their margin?
In their earnings?
Yes.
Absolutely. Their margins went up to 72 point. It's in the 70s, and that's higher than before. They were operating at like 70% margins, and that margin expansion is positive news.
But they had promised more than that.
72.3%.
They were looking to get back into the mid 70s, so they're not getting there.
Man, market drives a hard bargain, huh?
Yeah.
They're such an awesome business, but that's where there's such the expectations really high for them. Like, hey guys, it's not, and some of it is warranted because it's not like you're buying a company that's really cheap. No, it's a $4.43 trillion market cap company, and the stock price is at an all-time high. So I guess investors do have reason to be really, really high expectation related. And last year they were at 75. Interesting. So they did drop a little bit. All right.
What about Nvidia. What about their China sales? They were
well, they said that they didn't really have any China sales in the quarter, and they're not guiding to have any China sales in the next quarter, which would be the third quarter. And I was commenting that maybe that's a way for them to be a little conservative and kind of sandbag. Yeah. And maybe if we get to 3 months from now, they'll come back and say, hey, we did sell in China, and actually it added $5 or $10 billion of sales. And that would be their way to beat in about 3 months. I don't know. That's my guess.
So they had 20.14 billion last quarter.
They did in China.
Yeah.
And I guess the comment that I should have read more clearly, no H20 sales in China. All right. So we'll see. All right. So they announced their earnings. The stock is under a little bit of pressure. Not too bad. I wouldn't be surprised if it's trading in the positive at some point. This isn't a big move, 3.46. Maybe analysts are trying to get their heads around the numbers and then make a decision on the stock.
What time's the call? Do you know when they're having their call? Probably
they are
12 minutes or so.
Yeah, I think so.
So that could change things, but they're definitely on a down drift at the moment.
I think in the call, they're probably going to be asked some questions that are going to reveal a little more information on, the details behind this. So, where's the call? I don't see the call information, but it's going to happen here in a few minutes. And I think later on is when you'll hear more details on, hey, questions around China. They're probably going to be asked about China. They're probably going to be asked about, what's your expectation there? Margins. They'll probably be asked questions on margins. That'll be interesting to hear. All right. So Are we ready to move on to some of the other companies that announced?
Sure.
All right. So, guys, before we do that, let me just kind of go over some comments, and I'll apologize if I miss your comment. There's so many comments in the stream. There's 1,128 people on our stream. Thanks for joining. We just covered Nvidia in detail. The stock is under pressure. I've revalued the stock based on free cash flows and earnings per share. I'm coming up that the stock is priced 25% high, but there's only one Nvidia. Maybe that scarcity is worth it. And Daryl did cover the charts. Really interesting session there. Let's see some of your comments here. So Nvidia lost business in China. Interesting. Okay. So China's in focus when it comes to Nvidia. And then little J is saying that they didn't beat data center sales very well. That could be a problem. If you're seeing kind of either a pullback or just they can't build these data centers fast enough to consume more chips, that could be a problem. Yeah, they didn't beat on data center sales. Okay. All right. Good. All right. I think we covered all the other ones. And again, I apologize if I can't go over every comment because we have 100 comments. And we're going to now cover a couple other companies that announced that are having some interesting evenings. We'll go, which ones? Let's see. Let's go by market cap. So we just covered Nvidia. Let's go to CrowdStrike. So CrowdStrike's under pressure, down 7%. What happened to CrowdStrike? Year to date, this stock's up 23%, soon to be, I don't know if 16%, 15%. That's a pretty good haircut to the stock price. And analysts thought it was discounted by 10% before the earnings dropped. This is a market cap of $105 billion, revenues $4 billion. So you're paying up for this company about 25 times sales, which is an expensive ratio. Forward P 110, that's an expensive ratio. Now it's all about revenue growth. Show me some revenue growth. Let's see if we don't have it there. So let's see if we got some post here. So the revenue forecast disappoints. So this is Reuters, Business Wire. So what happened with revenue? Let's see if I can find that in their press release. So they achieved revenue record. Annual renewable revenue grows 20% year over year. Okay, that's lower than their typical growth rate. I'll show that in a little bit. So delivered cash flow. So the revenue is slowing down for CrowdStrike. Okay, so revenue of 21% growth. That is lower. Just from memory, this is a company that had been growing 30% for a while. This year ended on January 31st, but now we're in this year. So you see how this was expected to grow. This year, the company was expected to grow at 23.41%, but they just put up a number of 21. That's not meeting the expectation. The market's selling off the stock. If these guys turn into a slow grower, this is going to be a painful trail for investors because this is priced as a growth stock. This is not priced as a slow grower. This is a very good margin business, a very good cash flow generating company. But if you don't grow, you're going to be under pressure. And the same thing we saw with Fortinet. Fortinet, which is a cybersecurity company, announced a couple weeks back, and they came in lower than expected on growth, but they're growing better than 21%. And they got their stock under pressure. I thought it was a good buy. I ended up buying into Fortinet. I'll show you my valuation of CrowdStrike in a few minutes. I'm going to let Daryl show the charts first. But before I go to Daryl, yeah, 21% growth is going to be a problem for these guys. I think my valuation is going to be it's not going to it's going to show that this is priced at a premium. All right, so let me kick it over to you if I may, and then I'll work on my valuation. We'll come back to me, but you can show us the charts on CrowdStrike.
Okay, so they were showing some weakness going into the earnings. They've been trading underneath their midline RSI since the 10th of July, and even up until earnings, they were sitting only at 40. So they weren't in the bullish territory, which is above the 50 line. What I typically look for is if a company can hold about the 40 RSI, then I think they're still in pretty good shape on a pullback. But if they come down below 40, then I start getting a little bit more concerned. And that's what they were showing as they moved into the earnings, although they did have a positive day to day by a little bit. Looks like $3 or $4 per share, $5 per share. So the PPO is negative as well, currently sitting down about minus 2.8%. They did have a crossover, a bullish crossover, but it's in negative territory. So just means that people are less bearish. They have less relative strength than the S&P 500. Their momentum is just slightly better than the S&P 500. They did peak out as far as accumulation back on the 9th of July. It coincides with what I'm seeing in the price there. Then you can see that the money flow started decreasing and actually went negative into bearish territory. So they still are outperforming the S&P 500 by 35.95%. They're outperforming the technology sector by 30.87%. They're in the software industry group, and they are outperforming the software industry group by 7%. And that industry group is outperforming the S&P 500 by 7.05%.
All right. So a couple of interesting facts is they guided their next quarter guidance is they're going to grow at 20%, again, below the expected growth rate. So that's a problem. Second thing is their free cash flow did not grow for the first 6 months of the year. It's actually down compared to last year. So this stock is it's losing momentum. It's still growing, but it's growing at slower rates. It's giving up cash. It's putting more money into the business, probably having to develop a lot more things. So it's interesting to see this stock get under pressure.
If that's the case, Victor, normally I'd be watching that 200-day moving average to see if it could act as support. But based on what you're telling me, I think we're more in a support range of about 377 down to 360 or so. We might find support there.
Mm-hmm.
So you'll want to keep an eye on those levels. I think it could break the 200-day moving average based on the information you just gave us.
Break it to the downside or?
Yep.
Yeah.
Yep. I think the next level of support is going to be right around here, starting right there and going down to about 358. I have these price by volume bars are. This is where most of the buying was occurring over the past year, this gray bar here, which pretty much aligns with this top that they had on the 25th of May before they had this run. So I think based on what you're telling me, I would think the 200-day could be in jeopardy here pretty soon.
Yeah, I think the market is responding to the earnings logically, rationally. The stock's under pressure by 7%. The quarter that I'm going to reference is this third quarter. They're at $10 million of revenue. And when we go to their earnings, they're guiding they're going to be at 1,208 million. Well, if you do the math, it's a little less than 20% growth. That's a problem. It's like, hey, you're not growing like we thought you were going to grow before. You're beginning to look like a slow grower, and you're not going to get this growth-oriented pricing anymore. That could be the new theme about CrowdStrike. They're not growing fast enough. If we look at some of their competitors, let's look at that real quick just to see. Some of their competitors are Palo Alto, Fortinet, and Zscaler. So when we look at these guys, their growth rate is 15% in the current year, 12%, 10%. When we look at Zscaler, this year growing at 26%, 20%, 19%. So Zscaler is right there with them on growth. I think that CrowdStrike is bigger. So I think CrowdStrike's revenue growth is more impressive than Zscaler's. But the stock is not priced up like CrowdStrike's. CrowdStrike has had a stock that's really flourished over the 5-year. So you don't get this premier pricing if you're not going to be a premier performer. Having said that, when I updated all my valuation of CrowdStrike, I think they're 54% priced too high. The value of their cash flows, the value of their earnings per share is 54% below its current stock price. I think this stock's going to go under pressure, most definitely. They're already under pressure for 7% downside. The cybersecurity business, right? I've said this many times. It's not a winner take all business. It's fragmented, and it continues to be fragmented, will continue to be fragmented logically because bad actors that are trying to hack into companies, what they do changes over time. Like the way they were hacking into companies 20 years ago changed 15 years ago, and then a new skill set from these hackers developed, and a new cybersecurity company became really good at preventing that type of penetration. And then 10 years ago it changed, then 5 years ago it changed, and CrowdStrike had their moment. But now you're beginning to see that companies are beginning to depend on other companies. These companies are newer. They are defending against the new actors, a new way of intrusion. So I think that's a theme that I've seen in cybersecurity. It's not a theme where you've seen a company exist for 25 years and become dominant. Just doesn't happen. The dominant player 25 years ago is McAfee. You can't find McAfee now. You can't find some of the cybersecurity companies we had way back when. The companies now are just continuing to evolve. We saw Google Alphabet acquire that cybersecurity company. I can't remember their name, but they were they were not traded publicly yet, but they bought them for 20 or 30 billion. So now CrowdStrike's going to have to compete against Google Alphabet. Good luck with that. You're going to compete against a $2.5 trillion market cap company that's going to come at you. Good luck. So this one here most definitely is a sell. And that's my review of CrowdStrike. What else would you like to comment on CrowdStrike before we move over to Snowflake?
Yeah, nothing from me.
All right. So Nora had a quick question on Mongo. I thought Mongo's comment. Sorry, clicked on the wrong comment. So what's your take on Mongo? I thought they had a very good earnings. Their growth was excellent. And I'm impressed. And the market loved them today. So the stock went up. Could they continue to grow at those clips? I don't think so. Because they have some huge competitors that are treating them kind of as an annoying little competitor. Their database is okay, but it doesn't have any like, whoa, that thing does things better. It was a loss. It was a lower priced option to some of the big databases like SQL Server from Microsoft. And it carved out its space. But I think that's going to get harder and harder over time. We'll see. All right, let's talk about Snowflake. Snowflake is a new generation company. They handle the data platform. And what's a data platform? Why do we need these companies, right? So you have these, the world's gone to the cloud, right? You have AWS, big giant public infrastructure company. Companies move their workloads over to that cloud. Microsoft Azure is another big hyperscaler. Companies might have a big workload at AWS and a big workload at Azure and maybe another one at Google Cloud. And the way that you would manage your data across those silos of information is you can have it on a data platform like Snowflake. And this was a strategic solution 10 years ago. Very good. So they were kind of early to this market, servicing customers. And today they're having a stupendous after hours. Their revenue has grown nicely over years. They're still relatively small when you compare them to like a Microsoft or AWS, but they're growing very quickly. And let's take a look at their earnings announcement. I think I have to refresh, and then we'll take a look here. So I don't like looking at PowerPoints or presentations, excuse me. I like looking at good old-fashioned schedules. Here we go. I think this is going to get me what I want. Yeah. Okay, so product revenue was 1.09 billion, 32% year-over-year growth. That's better than their run rate, right? They were at 27, 29, 32 is better. Yeah. 13% rise. These guys are accelerating. That's very good. Breaking down the quarterly, see how they were decelerating from a percentage standpoint. And now they're like, boom, 32. Market's like, nicely done. And they start buying up the shares. So 32% growth is excellent. Good job. These guys do business with big companies. That looks good. Revenue is impressive. Very impressive. Outlook. So they're going to grow at 25 to 26%. They may be sandbagging a little bit, leaving enough room to beat. So that's still a very good number. They were growing slower than that previously. So that's looking good. That looks very good. These guys have good margins. All right. I'm scanning just to see the stuff that I want to see. Sorry if I'm giving you guys a headache. So this is 6 months, and then here's 25. So they lost a little bit of money. They're still at a net loss. No problem. Let's see your balance sheet. They used some of their cash. Yeah, they used up some of their cash. Not a big deal. They got plenty of cash on the balance sheet. They don't think they have a little bit of debt, 378, but they had like 3.5 billion of cash, so no problem. Cash flow. So their cash flow is declining. Okay, so they're not providing a lot of cash. In the quarter, it increased, but in the first 6 months, it declined from 425 to 303 for cash from operations. That's a line that's really important to me because I value companies based on free cash flows, and they're capitalizing software development. Okay. This is the only line that I would consider. So free cash flow for the first 6 months is going to be about $247 million. And that is lower than what they produced last year. So those are the numbers I focus in on. The revenue growth is great. Revenue growth for a young business like this, it's why investors are buying Snowflake. They want this business to end up being a $20 billion revenue company and the stock will flourish if they stay on that growth trajectory. The stock will flourish. The other numbers are less important, but important. I would say that that's why the stock is trading up, is investors really like that growth. What do you think of Snowflake?
Uh, it's not one that I follow, but they were showing a little bit of weakness moving into the earnings. But you said they're up how much after hours?
13%.
Yeah, that's really good. So that's going to put them up above the 50-day moving average, which has been declining. The 20 days been declining. That'll put them. What are they trading at? About 227. That'll put them back up here where they were at the beginning of July and at the beginning of August. They did have a lot of buyers today. The RSI is improving. It is still below the 50 measurement, so it's in bearish territory, and the PPO is also in negative territory, but we did have a crossover today, so a little less bullish or less bearish. Get it out here in a minute. The accumulation is below what we've seen as far as peaks. So the last peak that I saw was in 21 November of last year. It fell off really bad. It improved again, and then it's been declining since about the 7th of July, and the money flow is negative right now. So that's probably going to change tomorrow, would be my guess. They've definitely outperformed, as well as the software group, the S&P 500, and the technology sector. I think they're looking okay.
Yeah, they do look good, on revenue, and that's what sells. That's what the market's going to buy up. Their fundamentals on cash and earnings per share have not looked stellar. That is one of the challenges of this stock. Is okay. Do I pay for the growth, but know that they're not keeping up when it comes to free cash flow and their earnings? That's one of the decisions as an investor you need to make. So, is that what you wanted to share? You want to kick it back to me now?
One other thing that I could say is most of the buying happened at the 174 level. As we've been moving up into these higher prices, it looks like the volume has declined some. So it looks like people are mostly looking for a price between 168 and 174 or so. Interesting.
Well,
I'll
you would
kick it
expect
back
that,
to you.
right?
Yep.
You would expect as the stock price goes higher, investors are like, well, I really liked it when it was 20% lower, but now I don't know.
Yeah, exactly.
That is rational.
Yeah, it is rational.
Oh yeah, it's getting a little expensive. So let me show my valuation and then we'll go from there. So Snowflake is a good business. You're paying for revenue growth, but sometimes you don't get your cake and you don't get to eat it as well. And the cash doesn't support the stock price. It's actually the value of their cash. And I'm giving them a very optimistic growth rate on their cash over the next 4 years, or 25%. Very generous long-term growth rate of 5%. Even when I do that, I can't get to their stock price. Falling 31% short. When we look at their earnings per share, and I do need to update that number. So give me a second and I can update it. At 113, actually moved down a little bit. So growth rate there, 40%. That is a little too optimistic. So yeah, this one here just doesn't price really well. And their growth is really good, but man, I don't want to overpay for growth because strategically, again, these guys are going up against some big forces in the names of Microsoft, and even Google Alphabet has products that would like to replace Snowflake and take that revenue over. So this is, I applaud the after hours. I think they earned it with that growth rate, but it's just not a stock that I would buy into because I have other choices within software as a category that I think I'm getting a better price on the stock, a better reward opportunity, a more compelling discount. This one's just priced too high. And if they start to slow down, this one's going to fold like a cheap suit. So that's Snowflake. Moving along, let's get to a well-known company in Hewlett Packard. It's up 3% in after hours. I think it's a stock that you cover. Wait, what happened before my eyes? It went from positive to negative. That was weird. I guess they initially the market liked what they saw, and then they did not like what they were reading. Hewlett Packard has been under pressure in 2025. For the 1 year, it's down almost 24%, soon to be 27% or so, 26% or so. And this stock pays a nice dividend, but it's not a grower. Revenues have not grown for a while. This company sells PCs, printers, that kind of thing. And Hewlett Packard a long time ago was super cool. They created products that were great, but their innovation, I think, their capacity to be one of the big innovators left a while ago. And now they're more of a kind of a discretionary product producer that probably hung on to that printer too long. The printer business was great for them for a while, but they just hung on to that business too long. And maybe they could have replaced it with something else. Maybe they should be making phones now or something that's more a better growth engine for the company.
Michael Anthony beat me to the punch, but I have a feeling they're going to be heavily impacted by tariffs.
Sure. Everything they make is made in China. Everything they sell is made in China. So let me kick it over to you, and I'll work on my valuation of HP, and then we can go over that after you're done.
Okay, so they are falling in the after hours. It looks like they initially rose. These are 5-minute bars, so they've been trailing down to the downside. Looks like about 30 minutes ago they kind of leveled off at this 26.21 price. This is actually a company that I own basically for that dividend. I can't remember where I am in on this one. Yeah, I'm in at 28, so I'm actually in the red as far as my investment, but they've paid dividends. I'm actually positive on a net basis. So anyway, they've been trading sideways for 3 or 4 months. They were trading at a much higher level before, well, pretty much in the end of last year. They were trading at closer to 35, and then it started on a downward slope until we got to the tariffs, and it really hasn't recovered much from there because the tariffs were going to hit them hard. They're up 26% from the tariff lows. They are trading above their 20 and 50-day, trading below a downward sloping 200-day. That'll probably serve as any kind of resistance to the upside, would be my guess. They were showing relative strength going into the earnings. I mentioned that in my video previewing the earnings over the weekend.
Mm-hmm.
Then they pulled back to about 58 or so. They were closer to 70. They do have a positive PPO, so that's good. They have more momentum and relative strength in the S&P 500 overall. Been seeing a lot of accumulation since about March of this year. So even in this pullback, there was quite a bit of accumulation through May or so, and then it's kind of just leveled off. You can kind of see that in the money flow as well. It's positive and negative, positive and negative. So that hurts the accumulation distribution line. They are underperforming the S&P 500 by 31% over the last year, underperforming the technology sector by 33%. They are underperforming the computer equipment providers, computer hardware. They are underperforming that as well by 20%. And that industry group is also underperforming the S&P 500 by 12%. So I own this one just for the dividend. I don't expect to get rich off of this one. I'm a retired guy, so I like the income.
Mm-hmm. Yeah, this one, this is a good income stock for those that want that type of stock, but it's just not. I think the exposure to the downside is a little bit of a rough area to operate in. When I value the stock, it actually has a small discount. I've updated this as you spoke. It's just this is a space that's just getting disrupted by newer technologies. The PC business did okay. I think tariffs are going to hurt them, but the printer business, I mean, the printer business is just it only contracted by like 4% in the latest earnings. But you have to think that printers are just a thing of the past, and they should move away from that if they can. But it's going to be painful for them. They got to find something that's going to grow faster, or they're going to be the next Kodak, which is a very sad story, but it's reality. If you don't innovate, if you don't create new categories of products, you go away. General Electric and like 3M, they have been disciplined in knowing certain products, they got to get rid of them because they become contracting products that just cause the whole performance of the company to go down. General Electric, they had some years that were rough, but they're known for selling off businesses. You know, you could buy a General Electric light bulb in the store. That's not their business anymore. They realized that's not a good business to have. They sold it off. So they have only the businesses they feel are growing businesses, like the power generation unit, and they had the medical equipment business, and what else did they have? So and then they broke up the business in three pieces, but all three pieces were good. 3M has also done that. They've sold off businesses. That's part of, these older companies need to do that, or they end up becoming Kodak, and that's a bad thing for everybody at the company. So Hewlett Packard is slightly discounted. The dividend is there for older investors. Maybe this is a good idea, but not a stock that I hold, not a stock that I'm going to buy. How's the stock performing after hours? So it's down 2.43%. Let's take a peek at the stocks we covered today. Snowflake is flourishing in after hours, up 13.68. CrowdStrike is under pressure, not as bad as earlier. It's down 6.5%. And Nvidia is still under pressure, not too bad. 2.44%. That's not bad at all. Maybe it opens up higher tomorrow or trades higher. We'll see. I think there's a lot to cover on Nvidia. They're going to do the earnings call, and we'll see if they trade higher. So that's Nvidia. Man, what a cool call. We have 1,300 attendees. Thanks, everybody. We appreciate it very much. Hopefully you found the analysis and review of Nvidia as well as the other companies interesting. Thank you so much for the comments. Appreciate it. Please subscribe to our channels. We'd love to have you as returning attendees. We do live streams often, kind of go through this type of format. We also create videos. Daryl creates excellent videos on charting, and you think you can learn a lot from Daryl. I do videos principally on valuations and kind of trying to find intrinsic value of stocks, making decisions high level strategically on the business. Is it strong? Is it a desirable business? And am I getting it at a discount? Because you could buy businesses if you're patient at a discount. You just have to wait sometimes for the stock to sell off. So I think that's a very good stream. Anything else, Daryl, before we disconnect?
Nope, nothing for me. I enjoyed it. Victor,
Yeah,
thank you very much. Thank you all for
absolutely.
attending.
This was awesome, everybody. Thanks so much. Let's meet up again in 3 months for the next Nvidia earnings, as well as other big company earnings. We'll do watch parties for the big companies like we've done before, and hopefully we'll see a lot of these names again. All right, everybody. Have a good night.